Hello everyone and welcome back to another video. Everyone has their own way of investing, day trading, swing trading, options trading, and there's so many ways to make money in the markets. One popular way of investing that you can earn passive income is through dividend investing. Today we're going to explore what dividend investing is, why it is so popular, and if there's any better ways to invest and earn passive income. So what is dividend investing? When companies are money in their business, there's a point where these companies have reached the growth stage and have now become cash cows, and they don't know what to do with all that money, so they give a portion of it to their investors. So this is their reward for owning the stock, and you as the stock owner think this is great because now I'm getting paid to actually hold the stock. But wait, there's more. There's a lot of companies out there that are increasing their dividends over time, so you are making more money the longer you hold on to the stock. This sounds great, but can there be an even better way to earn passive income and have the stocks that you already own grow at a faster rate than what a dividend stock can? Or is this too good to be true? I'm here to tell you that this can be true, and it is possible through selling covered call options on the stocks that you already own. Options can be risky and complicated, and that is why a lot of people tend to stay away from them. When selling covered call options, you create a win-win situation for yourself because you shouldn't be able to lose with this strategy. Excluding penny stocks because they don't qualify for options trading, if you own at least 100 shares of a company, you should be able to sell covered call options. Let's have a look at Investopedia and see a clear definition for what a covered call option is. The term covered call option refers to a financial transaction in which the investor selling call options owns an equivalent amount of the underlying security. To execute this, an investor who holds a long position in an asset then writes or sells call options on the same asset to generate an income stream. The investor's long position in the asset is the cover because it means the seller can deliver the shares if the buyer of the call option chooses to exercise. An option is a contract between two parties, the buyer and the seller. The seller of the call option gets paid by the buyer for the contract to buy the seller's shares. They agree on a price, which is called the strike price, and they agree on an expiration date, which is when the contract will expire. This means that for the buyer of the call option to make money, the stock price has to hit the strike price before the expiration date. After this happens, the buyer of the call option is set to profit big because they paid less for the option as they would have paid for buying the shares outright, but they get to profit as if they bought the shares at full price. On the other hand, most call options expire without hitting the strike price within the expiration date, which is called expiring out of the money. This is where the seller of the covered call option gets to keep the payment from the buyer and not have to sell his stock. Now, with that out of the way, what I recommend is to buy growth stocks or FANG stocks that have a lot of growth potential. These are companies that are continually reinvesting their profits to grow even more. To me, a dividend company is saying that we have a lot of profits, but we don't know what to do with them, and we can't reinvest it at a higher rate than you can, so we're gonna give this money to you. In my opinion, if I invest in a company and they think that I can reinvest the profits at a higher rate than they can, then they don't deserve my money. To me, a high dividend company is saying that we're looking to stay here fat and happy and not continue to innovate, while another company that reinvests their profits and continues to innovate will take them out of business in the future. In my opinion, the best way that you can maximize your yearly rate of return is to buy growth stocks at a great discount or a great margin of safety and sell covered call options. If the option contract expires without hitting the strike price within the expiration date, you get to keep your stock and you get to sell another covered call option, and you get to do this again and again and again. Typically, as the seller, you want to set the strike price at a higher price than you paid for the stock, because in the case that it hits the strike price, you are still profiting from the stock selling at a higher price. If the strike price does hit before the expiration date, what happens is that the buyer gets to keep your stock while you have collected the money for the options contract, and you also get the profit from selling the stock at a higher price in which you bought it for. You're getting more capital gains because growth stocks have more upside than a typical dividend stock, and you're collecting passive income from selling the covered call option. As I said in the beginning, this creates a win-win situation for the seller of the covered call option. Now, you're going to say, how come you can't sell covered call options on dividend stocks and make double the passive income? You can do this, and I would recommend that you sell covered call options on any stock that you plan on holding long term and you hold at least 100 shares. However, high dividend stocks are often mature and predictable stocks, and you don't have the same amount of upside as a growth stock, so you won't have as much capital gains. I'm sure there would be exceptions to this, but this is usually how it works. Also, because of their predictability, the price of the call option will not be as high as a growth stock, and you won't receive as much of an income. So that is it, guys. Thank you so much for listening. Let me know in the comments below whether you think dividend investing is a great way of investing, or whether you think selling covered call options is the new way towards better passive income. If you did enjoy the video, please click a like and subscribe, as I am trying to grow the channel, and I will see you on the next video.